If you're generating revenue and your bank account doesn't show it, you're not alone. Most business owners are stuck in the same cycle. Long hours, rising costs, decent sales, but barely any profit. I'm Trevor Densmore, founder of TJD Accounting Tax. We help businesses across the U.S. clean up their books, lower their taxes, and finally see where the profits are leaking out and how to fix it. Because the truth is, profit isn't about working harder or selling more. It's about using the same strategies the top 1% have already mastered. Clean books, smart entity structure, tax planning, and cash flow visibility. And if you do it right, you can be more profitable than 99% of businesses in just 90 days without making a single extra sale. In this video, I'm showing you the exact steps we use with our clients to help them grow their profit margins month after month. And it starts with one number you probably haven't checked all year. First, you want to structure your business wisely. This isn't just paperwork. This is a foundational financial decision. Picking the right business structure can have implications on your taxes, your liability, and growing your business in the future. The problem is many business owners pick the simplest solution, which is often a sole proprietorship or LLC, without understanding the tax implications or the risk to their personal finances if they were to get sued or incur debt from their business. They often miss out on tax savings as well as liability protection. There are four primary business structures. First, we have the sole proprietor or general partnership. This is a very simple entity to set up and it's pretty straightforward, but it doesn't offer any personal asset protection. Meaning that if sued or if you incur any debt liability from your business, you are personally liable and your assets are at risk. Taxes for this business structure are pretty simple. It flows directly to your personal tax returns. Next, we have the LLC, also known as the limited liability company. This is a very popular choice amongst business owners. It offers personal asset protection and taxes are relatively simple. LLCs are considered pass-through entities, meaning that the profits made from the LLC is passed through to your personal tax return and reported on the Schedule C of your personal tax return. Then we have the S Corporation, which offers significant tax savings on self-employment tax if managed properly. But keep in mind, the S Corp has more complex payroll requirements and also has more complex reporting requirements. Lastly, we have the C Corporation. This entity is subject to double taxation. The profits from this entity are taxed, and then the dividend payments that are paid out to the owners are taxed as well. This entity does best when you plan on keeping the money within the business and using it and reinvesting it for growth, or if you're sinking venture capital. If you need help in figuring out which business structure is the best for you, you should consult with your local accountant. When trying to figure out which entity structure is best for you, you shouldn't guess which structure is right for you. You should talk to your accountant before officially launching your business or if you're considering a change. This choice could be the difference between saving thousands on your taxes and future headaches. 2, pay yourself properly. It is important that you, as the business owner, establish a clear, consistent way of paying yourself. This is crucial for your business health as well as your personal financial stability. One of the biggest problems I see is that many business owners pay themselves inconsistently, often when they see that the business has generated extra income, or they treat their business bank account like their personal ATM, taking money out whenever they need money to pay for whatever. It breaks the corporate veil, which is that limited liability protection that you receive when you're incorporated as a LLC or a S corporation or even a corporation. When you break that corporate veil, it jeopardizes your personal finances. This is also important because you need to know if your business can actually support you. And intermingling funds, pulling out money whenever you want to or see fit to, oftentimes leads to poor financial management for your business. In order to pay yourself properly, first you want to establish separate bank accounts. meaning that you want to have a separate personal bank account and then you want to have a separate business bank account. This is very fundamental and it's the foundation for your business and paying yourself. And it also helps maintain that corporate veil of protection. Next, you want to set up a regular and realistic amount to pay yourself. This helps with your personal budget as well as seeing what your true expenses and profitability are. Third, you want to understand your business structure. Depending on your business structure, this can dictate how you're supposed to pay yourself. For example, an LLC, they do not need to pay themselves a salary since they are a pass-through entity. But if you're an S corporation, one of the requirements of an S corporation is to pay yourself a W-2 wage, a reasonable W-2 wage at that. Lastly, you want to prioritize your business health. Your pay should be sustainable without jeopardizing the business cash flow or the ability to invest in the business growth. So if you're ready to pay yourself properly, you want to think of yourself as an employee of the business. You want to determine a suitable owner's draw or salary based off of the business budget and the current business cash flow. Then you want to set up a consistent automatic recurring transfer from your business account to your personal account. 3, you want to build a smart budget and manage your cash flow. Your budget is your roadmap to success. It's crucial in helping you to make informed decisions and also helping to make sure that your business stays afloat. One of the major problems I see with small business owners is that they don't have a budget, or if they do have a budget, they don't properly maintain it or update it. You see, your budget is important because it allows you to see what money is expected to come in and then what money is expected to go out. It also allows you to plan for expenses or to purchase assets and figure out when's the best time to purchase those assets or reinvest that money into certain parts of the business. A lot of business owners think that just growing and making more money is going to solve all of their problems, but that's not the case. If you don't have a budget and you're not actively maintaining it, you're just flying blind and you aren't seeing where you're overpaying on expenses. You're not seeing how much money you actually need to make to support your operating costs, as well as actually being able to pay yourself and take profit and have profit for the business. There are 2 types of budgets I typically recommend that my business owners have. First is the operational budget. This is important because it shows how much money you plan on making within that period of time and what expenses have to be paid within that period of time as well. The next budget I recommend is the cash flow budget. This is a crucial budget. It shows the actual cash flowing into the business and the actual cash flowing out of the business. This is important because your business can still fail because you're running out of cash. And this budget allows you to see where that cash is going. You see, budgeting is important because it allows you to avoid unexpected cash shortfalls. It allows you to strategically allocate funds, identify areas of overspending, and inform your pricing. Once you have your budget, you want to make sure that you're reviewing your budget monthly and comparing it to your actual performance. You don't want to just set it and forget it. It will help you anticipate cash shortages. And if you see those cash shortages, you can then either accelerate your receivables or manage your payables and when you pay those. 4, you want to know your numbers. You want to track your KPIs and make sure that your books are up to date. As a business owner, you want to go beyond basic revenue. You want to understand what your numbers mean and keep your financial records up to date. A common pitfall I see with many business owners is that they wait till tax time to update their books. This is a major issue because oftentimes you're just relying on the amount of money you see in your bank account or a gut feeling on how much you're making, what you're spending, and whether or not your business is even being profitable. You aren't accurately measuring your time, the amount of money or expenses spent, and you're missing opportunities to cut costs and scale profitably. So although you feel busy, your business may not be profitable. KPIs, also known as key performance indicators, are metrics that give you a clear snapshot of the performance and health of your business. Some essential KPIs to track are gross profit margin, which is revenue minus cost of goods sold divided by revenue. This lets you know how profitable your core business sales are after accounting for direct production costs. The next KPI is net profit margin. This is net profit divided by revenue. This shows your overall profitability after all expenses are considered. Then there's cash conversion cycle. This lets you know how long it takes to convert your investments into inventory and accounts receivable into cash. Typically, a shorter cycle is often better. Last is day sales outstanding. This lets you know the average number of days it takes a customer to pay you after a sale. Then you want to make sure that you're keeping your books up to date. You want to make sure that you're regularly recording your transactions, reconciling your books, and ensuring your financial statements are accurate. Your books are the source of your KPIs. So without accurate and up-to-date books, your numbers are meaningless. So you want to make sure that you're setting up a system for daily or weekly bookkeeping. Whether you do it yourself or outsource it, you want to make sure that there's consistency. Then you want to compare your KPIs to industry benchmarks to see how you stack up against your competitors. 5. Embrace modern accounting software. Investing in the right accounting software is essential for accuracy, efficiency, and valuable insight. Many small business owners either use outdated manual methods such as spreadsheets or free basic tools that don't scale. This leads to wasted time, errors, lost receipts, difficulties producing financial statements, and just overall lack of confidence in their financial reports. They often find themselves scrambling during tax time. Modern cloud-based software like QuickBooks or Xero automates many tasks, provides real-time data, makes tax preparation simpler, and generates essential financial statements with ease. A key habit that you want to start is monthly bank reconciliation. This is your primary financial checkup. It ensures your accounting records match your bank statement, catches errors, fraud, and ensures accuracy. If you're still relying on manual spreadsheets for everything, it's time to upgrade. This isn't an expense, it's an investment that saves time, reduces errors, and provides crucial data. 6. Don't wait. Plan for taxes year-round. Taxes are one of your biggest expenses. Managing them proactively throughout the year is vital, not just during tax season. One of the biggest stress for small business owners is a surprise tax bill. They don't set money aside throughout the year, don't know what deductions they're eligible for, and often miss deadlines for estimated tax payments, leading to penalties and major cash flow shocks. This annual panic can be debilitating. Tax planning should be a continuous process, not just a scramble in April. Business owners need to understand and calculate quarterly taxes. They need to maximize all eligible business deductions, such as home office, vehicle mileage, and equipment depreciation. In addition, explore tax advantage retirement plan contributions for yourself and your employees. Some examples are SEP IRAs and solo 401ks. Business owners should regularly consult with their accountants. They can help you plan for major purchases or sales, advise on new tax laws, and prevent costly surprises. You're also going to want to remember to set aside money for your taxes in a separate savings account every single month. If you made it this far, you already know profit doesn't come from grinding harder. It comes from clarity, control, and smart financial strategy. Most businesses don't fail because of lack of sale. They fail because they don't know where the money is going. And most CPAs won't tell you that. At TJD Accounting Tax, we help business owners fix their books, cut unnecessary expenses, reduce their taxes, and finally take home what they actually earn. So if your business is growing and your profit isn't, now is the time to fix that. Click the link in the description to book a free call with me and my team. We'll look at your numbers, identify what's holding your profit back, and show you exactly how to turn things around in just 90 days. Don't let another quarter go by without the profit you deserve. Let's build a business that pays you like it should.